Bankruptcies and foreclosures increase as an economy plummets. The current economy is circling the drain, and that forces people to make some tough decisions in face of mounting debt. In some cases, it means selling the house and moving into an apartment. It means trading in the big family car for a smaller economy model. As a last resort, it means filing bankruptcy. Bankruptcy is a way of seeking debt relief, paying creditors, and retaining some amount of existing property. If filing bankruptcy is the only way to save the family home or business, then it's the decision most people would make. Credit scores fall dramatically in the wake of a bankruptcy, and getting a car loan after bankruptcy becomes a nearly impossible task. After the discharge of bankruptcy, your finances will fall under the supervision of a court-appointed trustee. This is a court officer who sees that the money ordered to be paid to debtors actually gets to them, that the debtors' funds are disbursed responsibly, and that none of the terms of the bankruptcy are violated by either debtor or collector. It is protection from lawsuits and collections, but not a forgiveness of all debts. It is an act of compromise to see that all parties are made whole, or as near as possible. Adding a car loan to the complex existence bankruptcy brings is something that a trustee will weigh in on with the full examination of the debtor's finances and source of income. A car loan after bankruptcy is like getting a car loan with no credit. Lenders will seldom provide financing for anything other than a used car, and under strict conditions when they do. High interest rates come with car loans in the wake of a bankruptcy. The lender will examine the borrower's credit history as well as credit scores to determine how big a risk the borrower is for defaulting on the loan. The lender will also require proof of income and pay close attention to the conditions of the discharge of bankruptcy before approving the loan. Sometimes the car loan will have to come by way of buy here, pay here car dealership. These operations handle their own financing and have an all-used vehicle inventory. They have direct ownership of their cars and direct control over payments made. Their interest rates are high, and they always require a minimum down payment. This is a last resort for car loans, but one that is frequently used by people in need of car who are in a financial jam. BHPH car dealerships do all their business in person. Payments are made in person, and collections are done solely by the dealership, because no bank or lending companies are involved. No data is submitted to credit reporting agencies, so the loan agreement has no effect on credit scores, no matter what the outcome. After 7 to 10 years have gone by and all conditions of the bankruptcy have been fulfilled, the life of the consumer returns to normal, more or less. Depending on what chapter the bankruptcy was filed under, the ability to get a car loan becomes fairly routine. Credit does rebound eventually, and the consumer can look at getting a new car under the same circumstances as anyone who'd not been through the bankruptcy grinder. This demands strict adherence to a budget and following all guidelines set down by the court. But since thousands of people have done it before successfully, there's hope that anyone just resurfacing from bankruptcy proceedings will enjoy a normal financial life as well. Federal Auto Loan. Good credit, bad credit, no credit, all good.